Good day. Today is Friday, July the 4th, and the US are celebrating their National Day. So, therefore, tonight in New York, the market will be closed. Now, we have noticed that the dollar has been falling continuously since the beginning of 2025. And as of this morning, we realized that the dollar index has fallen roughly about 11% from the peak of the year. So a lot of people were saying that they expect to see further dollar weakness going forward. Now that may be the case, with considering the poor fundamental in which we are operating under. However, the technical rebounds cannot be ruled out, and we are beginning to see the green roots of a possible technical rebound in the dollar index. To explain what I'm suggesting here, I will have to refer you to the price chart. Now, what you are seeing in front of you here is the dollar index futures contract traded out of the Intercontinental Exchange or ICE. Now, the most active month right now is the September contract, and the chart here is a continuous chart here, meaning to say that it also includes previous expired futures contract. So what we can see here on the monthly time frame is the long-term outlook for the dollar. You will notice immediately that the dollar bias is still to the upside with the high at 114.75 only recently. So we can see that the high from there has resulted in a three-wave pullback, resulting in the current price about 96.58. So this is the current outlook. Now the high from the move down from 114.75 unfolds as a three-wave and is currently sitting on a support line going back all the way to 2011. So we can see this is a long-term trend. The underlying trend is bullish, although we have currently a unfolding counter trend in place. So this is suggesting to us that if the market continues to go lower, somewhere between 90.85 to 94.5, we may expect the long-term dollar index futures to actually perhaps meet some demand here. So this will be the ideal outlook. However, having said that, the support line that we have here on the chart here could also provide immediate support to the dollar index here. Okay, so this is the monthly outlook. Now, I want to move on to the weekly outlook. So from here, we can clearly see the three-way pullback from 114.75 unfolds very neatly, and we are just a whisker away from a textbook retracement level of 100%, that level being 94.49. So we are just a little way off this target here. The most recent low here this week is at 96 even. So that means to say that there may be potential for the market to extend lower, but as it goes lower, anywhere between 90.825 to 94.49, the market could meet some demands for the dollar itself. So this is the overall outlook for the weekly time frame, although the bias to the upside remains unchallenged. You can see that the bigger box here is shaded in green, suggested that is the dominant trend. And the box where the prices have been coming down, this is the counter trend. Next, we move on to the daily time frame. Here you'll notice that the overwhelming bias is still to the upside because the bigger box is still shaded in green. We have a counter trend that has been unfolding from 110.01, and this has yet to hit a target. This target is at 94.49, being equality move from this move here. So this is the outlook for the daily time frame. There is potential for further losses. However, as we get to the lower time frame, what we are witnessing is a possible technical rebound may be in the work. Here is the 4 hours time frame. Here, obviously, we see that the low here is at 96 even. We have a bit of a counter trend bounce here, resulting in the dollar index hitting a high of 97.065 in yesterday's trading before the release of the non-farm payroll for the United States. And here we are seeing a counter trend being in place. So this is where I believe technically there could be a bounce forthcoming in the dollar index. Here is a blow up of that period of that low from 96 even to 97.065. Now we can see that as prices has been falling back down again this morning and this afternoon, if the price gets into this bracket of prices anywhere between 96.45 to 96.285, that would present another buying opportunity. If and when prices drop into this bracket of prices here, there is the scope of, or rather the possibility of buying interest re-emerging from this space here. So if that's the case, there could be a potential trade setup available. Now we look into the 1 hour time frame here. This is the 1 hour time frame. You will notice that in this chart here, the dominant trend is actually down, whereas the bounce from 96 even is actually the counter trend now in the lower time frame. Like I said, if the price continues to dip further between 96.285 to 96.45, then it could present a buying possibility here. And all that is missing is a buying or rather a reversal signal in the lower time frame within this bracket of prices. So if one does present itself, this will be a good area to pick up some speculative long position with a stop just below the low here at 96.285. I will put it at 96.275 just to be on the sure side. The target for this move, if not stopped up, I'm targeting 97.55. So that means that this trade setup potentially may give me a 1:6 risk reward ratio. Perhaps this is a trade that I may take because for every $1 risk I'm prepared to take, there is a potential for $6 potential profit, making this trade setup quite ideal. For those who are looking to trade the counter trend, this could be a outlook you can consider. In the meantime, this is all I have for you for now. Until the next update. Bye bye.